Are you just completely confused by debits and credits? Then this is the video for you. I will be explaining debits and credits using a three-step, simple approach to understand exactly which accounts need to be affected by each transaction and which accounts should be debited and which accounts should be credited. Hi, I am Dr. Pollock from the No Stress Accounting Hub. I have a PhD in accounting and have been lecturing accounting for the past 14 years. I look forward to taking you on the journey of debits and credits and helping you to achieve success in debits and credits by the end of this video. As I said, we are going to be looking at a three-step approach, which is going to help you to fully understand each transaction, which account should be affected, and the debit and credit for each of these transactions. But first things first, we need to get to the basics. So debits and credits, you kind of might be thinking or have thought to yourself that debits and credits means pluses and minuses. And to a degree, you might be correct. But debits and credits is the terminology that we use to ensure that our accounting equation remains balanced. For now, all you need to know is that debits will go on the left-hand side of your T accounts in your general ledger, and that credits will go on the right-hand side of the T account. So think about the debit and credit just telling you on which side of the T account you need to be working. As we go through the actual accounting equation, we'll link these debits and credits to that accounting equation, and that is going to help you make a lot more sense of debits and credits and on which side they lie. The accounting equation says that assets are equal to liabilities plus owner's equity. To understand the accounting equation, we must first break it down into its elements and understand each element of the accounting equation. So what are assets? Assets are the things that the business owns. What about liabilities and owner's equity? Liabilities and owner's equity are the things that the business owes. So liabilities are the things that the business owes to third parties, while owner's equity are the things that the business owes to the owners of the entity. In other words, the ones that have actually contributed to start the business and to start it from operating. How is the accounting equation now linked to debits and credits? Well, we need to understand that the different sides of the accounting equation are affected by debits and credits in a different way. On the left-hand side, we have assets. Assets increase on the debit side and decrease on the credit side. So in other words, we're standing on the left-hand side of the accounting equation, and those items increase on the left-hand side. So they increase on the debit side and decrease on the credit side. Once we jump over to the other side of the accounting equation, we're standing on the opposite side of the accounting equation. And so those accounts, being liabilities and owner's equity, will now increase on the opposite side to what we saw happening with assets. They will increase on the right-hand side. Remember, they stand on the right-hand side, so they will increase on the credit side because the credit side of our T account sits on the right-hand side of the T account. Okay, so we can see that assets being on the left-hand side, owner's equity and liabilities being on the right-hand side of the accounting equation increase and decrease on different sides. That's very important. And that's why I said to you just now that you would be partly right if you thought that debits and credits talk about pluses and minuses. That's true, but you can see now that when you look at the accounting equation, each element of the accounting equation is affected by debits and credits in a different way, depending on which side of the accounting equation it lies. Right, let's move a little bit further into the explanation. I said to you that we are going to use a three-step approach to be able to understand debits and credits, how each transaction works in terms of how is it going to affect the different accounts in our accounting equation, and which accounts should be debited and which accounts should be credited. So to analyze this, we follow a three-step approach. For each transaction, you're going to ask yourself three questions. Number one, which accounts are affected by this transaction? Number two, determine if those accounts are increasing or decreasing. And number three, then decide whether those accounts should be debited or credited based on which side those accounts will then either increase or decrease based on the transaction you're working with. Let's jump into a basic example. Our first example is going to be a loan of $200,000 which the entity has obtained from the bank. So which accounts, step number one, remember which accounts have been affected by this transaction? Two accounts. The bank account has increased because we've received funds from the bank. Remember, we loaned money from the bank, so they are going to transfer those funds to us. So our bank balance as the entity has increased. So the first account that is going to be affected is our bank account. Right, let's move on to step number two for the bank account. Has the bank account increased or decreased? Well, in this instance, we received the money from the bank because remember, we loaned the money from them. So we received the money. In other words, our bank account has increased. Great. Now we go back to the accounting equation. On which side does the bank account lie? Well, the bank account is an asset. So assets sits on the left-hand side of the accounting equation, and assets increase on the debit side because debits are on the left. Right, so when we process the first part of this transaction, we are going to debit our bank account with $200,000. We've dealt with the first account that was affected by this transaction. But remember, for every debit, there is going to be a credit. So there's at least two accounts that should be affected by each transaction. We've dealt with the first one, which is bank. What's the second account that's going to be affected? Because we loaned this money from the bank, we owe them money back in return. So our loan is a liability. Remember, liabilities are things we owe to third parties. So the loan is a liability. Right. Has the loan increased or decreased? Well, when we got this loan, it increased, right? We didn't have a loan before. Now we have a loan, so we have increased our loan account. Great. On which side now in step number 3 should we increase the loan account? Loan account is a liability. It sits on the right-hand side of the accounting equation, and our right-hand side accounting equation items increase on the right-hand side. In other words, they increase on the credit side. So in this transaction, we will credit the loan account $200,000. And there we have the full transaction. A debit to the bank account of $200,000 and a credit to the loan account of $200,000. Okay, our second example is when an entity is now acquiring inventory or stock for an amount of $50,000. Step number 1, which accounts are being affected by a transaction? Two accounts. Remember, there's definitely always going to be two accounts affected because for every debit we need a credit. So what are the two accounts that are being affected? Inventory is increasing because we're purchasing inventory, and our bank balance is becoming less because we have paid money out to purchase the inventory. So let's start again with the easy one, the bank balance. We said we know that bank has been affected. Has bank increased or decreased? In this example, bank has decreased because we paid money out. Bank, which is an asset sitting on the left-hand side of the accounting equation, decreases on the right-hand side. In other words, it decreases on the credit side, and so we are going to credit the bank account with $50,000. Now we move on to the second account that is being affected. Inventory. Inventory was being purchased, so inventory has increased. So in step number 1, inventory is affected. Step number 2, the inventory account balance has increased. Inventory is what? Inventory are things that we own. So inventory is an asset. Inventories, which is an asset, increases on the debit side. So we will debit the inventory with $50,000. And there again, we have our entire entry. A debit of $50,000 to the inventory account, and our bank balance should be credited with $50,000 because we have paid $50,000 out of our bank account, decreasing the bank account, and therefore crediting the bank account with $50,000. Once we have our debit and our credit, our accounting equation balances because we know that we have, for every debit, we have a coinciding credit. That was then example 2. Example 3. We now acquire a building for $1.5 million via a loan. So which accounts are being affected by this transaction? Number 1, we are buying a building. So building is going to be affected. Number 2, we have purchased this house. We acquired it via a loan. So our loan account is going to increase. So those are the two accounts that are being affected by the transaction. Let's start with the actual building account. Buildings, what has happened? Our buildings have increased. So on which side do buildings increase? Well, buildings is an asset. It sits on the left-hand side of the accounting equation. Therefore, it will increase on the left-hand side, being the debit side of my accounting equation. Right, then we go on and we look at the second leg of the entry. So in other words, which other account is being affected? In this example, we said we have a loan account, right? Loans are liabilities. What has happened with the loan? The loan has increased because we borrowed the money from the bank. So now, as my loan is increased, in other words, I need to go and increase the loan account. I need to go and have a look on which side of the accounting equation does my loan sit. A loan is a liability. It sits on the left-hand side of the accounting equation. What has happened? The loan has increased. On which side do loans or liabilities increase? They increase on the credit side. So we will credit the loan account with the $1.5 million. And again, there we have our entire transaction. We have a debit of $1.5 million going against the bank account, which is my asset, increasing on the debit side, and we have our loan balance, which also increased in this example, but loan, because it sits on the left-hand side of the right-hand side of the accounting equation, increases on the right-hand side, and we know that our right-hand side items are our credit items. So those are three basic examples that we have had a look at. What I want us to now do is take this a little bit further, because we also need to understand that owner's equity is made up of a couple of items. So let's break that down a bit further. Okay, so now you might be thinking, what do you mean there are items that form part of owner's equity? So basically, we are going to be discussing three different items that actually form part of owner's equity. And those three items are my income, expenses, and dividend accounts. And we will look at how they influence owner's equity so that we can decide, when we look at those accounts, income, expenses, and dividends, on which side we should debit or credit those accounts. So we need to understand that they form part of owner's equity. So to understand how they form part of owner's equity, or that they are actually part of owner's equity, we need to take a step back and think about what is owner's equity again, okay? So the first thing you need to remember, we said owner's equity sits on the right-hand side of the accounting equation. And you'll remember we looked at this earlier and we said all of those items, the liabilities and the owner's equity that sits on the right-hand side of the accounting equation, those are the things that the entity owes. Okay, so owner's equity is something that we owe. Who do we owe it to? It's funds or stuff that we owe to the owners of the entity. So the person or the people that have invested in the entity, in other words, they gave the capital to start the entity, or at some later stage they invested in the entity, like for example a shareholder. So those are the owner's equity items, right? So owner's equity are the owners of the entity, and we owe them money. When would we owe them something? Or why would they invest in the entity even to begin with, right? They would want to invest in the entity because they're expecting some kind of return. What return do they want? They want to share in the profits, okay? So profits influence our owner's equity. Why? We just said that the owner's equity, they want part of the profits. They like, give me the profits. Why did I invest? I want some of those profits in return. So profits do what? When I make more profit as an entity, I owe more money to the owner's equity because I now need to pay some of the profits over to them. So I owe them more, okay? If I make less profits, then obviously I'm going to owe them less. So profits influence owner's equity. But what forms part of profits? Income and expenses. So income and expenses is actually what? Is actually owner's equity, because once I have these income and expenses, they actually are my profits, and they are the things that I owe to the owners of the entity. So to understand whether or not income and expense items should be debited or credited, we need to look at them inside owner's equity and their effect on owner's equity. So let's just break that down. Income does what? The more income the entity makes, the more money they should owe to the owner's equity. So incomes increase owner's equity, increase the monies we owe. So income, if owner's equity is being increased, owner's equity increases on the credit side. So income will always be credited. So you remember we said in step number 1, we always have to go and decide which accounts are being affected by this transaction. And if one of those accounts is an income account, then the income will always be shown on the credit side. Why? Because income increases my owner's equity. The more income I make, the more money I owe to the owner's equity. Then we also have to look at expenses. What happens with expenses? The more expenses I have, the less profits I have, right? So the more expenses I have, the less I can pay to the owner's equity. So expenses does what? Expenses reduces owner's equity. On which side does owner's equity decrease? Owner's equity, remember if we look at the accounting equation, it sits on the right-hand side. So on which side does it decrease? It decreases on the left-hand side, on the debit side. So expenses reduce owner's equity reduces on the debit side, and so expenses will always be debited. Great, so we've spoken about income and we've spoken about expenses. Let's now speak about dividends. So dividends paid is money that the entity pays to the owner's equity, right? The owners of the entity, the shareholders, they get a dividend. So once the entity has paid the dividends, what has happened? They now owe less money to the owner's equity because the owner's equity has decreased. We've paid them a portion of the funds that are due to them. So dividends paid does what to owner's equity? It reduces owner's equity. On which side does owner's equity decrease? Well, it sits on the right-hand side of the accounting equation. It therefore decreases on the left-hand side, so it decreases on the debit side. So dividends paid will always go on the debit side because it reduces owner's equity. So whenever I look at my income items, my expense items, and my dividend paid items, they are actually part of owner's equity. And when I want to decide if they should be debited or credited, I always go and have a look at their effect on owner's equity. Let's now have a look at some basic examples of income and expense items to understand how they should be recorded and how they should be debited or credited. Okay, in our first example, we are paying an electricity expense of $500. Right, what has happened? We have an expense account that is being affected and our bank account is going to decrease. So we have the two accounts. We have the bank account, we have the electricity account. Let's start with electricity. Electricity in this case is an expense. Expenses are what? They're actually part of owner's equity. We just spoke about that. So what do expenses do to owner's equity? Because remember now we need to understand them through the eyes of owner's equity. The owner's equity has decreased. So the account is expenses, electricity expense. Is the electricity expenses increasing or decreasing? We have to look at it through the eyes or through the lens of owner's equity. So to decide if it should increase or decrease, we look at its effect on owner's equity. Expenses reduce owner's equity. So owner's equity should decrease. On which side does owner's equity decrease? Owner's equity decreases on the debit side. So expense or the electricity expense account will be debited with $500. We have the one leg of the entry. Remember we said there's always going to be double entry accounting. So for every debit, there should be a credit. So we have the electricity account. The electricity account was debited. So what's going to be credited? Well, the bank balance. Remember we paid for this electricity. What happened to the bank account? The bank account became less. Bank account is an asset. On which side do assets decrease? They decrease on the credit side. So we will credit our bank account with $500. And there we have the whole transaction. Electricity expenses will be debited with $500. The bank account will be credited with $500. How did we decide what to do? We followed our three-step approach, but remember, whenever it comes to income and expense items, we always have to decide how to debit or credit them by looking at them through the lens of owner's equity, because they are actually owner's equity items. They influence how much money is due to the owner's equity. All right, so that's the first example. Let's jump into a second example. The second example, we are now working with income. In this instance, the entity has received a rental income in the amount of $2,000. Okay, great. So what has happened? Rental income is income. Income has increased. So we have to think about its effect on owner's equity. What does income do to owner's equity? Income increases owner's equity. The more income we have, the more money we owe to the owner's equity. So the income increases owner's equity. On which side does owner's equity increase? It increases on the credit side. So our rental income account will be credited with $2,000. We have the one leg of the transaction. We now need the other one. What other account is being affected by this transaction? Our bank balance, because we have now received this money. We received the rental income, so our bank balance has increased. Bank account is an asset. On which side does it increase? It increases on the debit side, and so we will debit the bank account with $2,000. And there we have our double entry, a debit to the bank account of $2,000 and a credit to the income account, being our rental income, of $2,000. So we have a debit for every credit. We've checked which accounts needed to be debited and credited by following our three-step approach, and always remembering, as I said, whenever we look at income items, expense items, or dividend paid items, to see them through the lens of owner's equity. Have a look at their effect on owner's equity to decide if we should debit or credit. I hope that you now feel so much better about debits and credits. You're not stressed anymore. You know that whenever you want to understand debits and credits and how your transactions should look like, all you do, you think about the fact that you know what your accounting equation looks like. You know that debits are always on the left-hand side, credits on the right-hand side. We know that our items that sit on the left-hand side of the accounting equation, our assets, they always increase on the left-hand side, so they always increase on the debit side and decrease on the credit side. When we stand on the opposite side of the accounting equation, we have our liabilities and owner's equity. They are the things we owe. They sit on the right-hand side of the accounting equation. So on which side do they increase? They increase on the right-hand side. What always goes on the right-hand side? Our credits. So they increase on the credit side. They decrease on the debit side. Once I understand the accounting equation and it's linked to debits and credits, I just go through my three-step process and I decide which accounts are being affected. Are they increasing or decreasing? And based on that, I go and look at my accounting equation and decide if they should be debited or credited. Please subscribe to my channel. I absolutely love teaching accounting. There's nothing I love doing more. If you want to receive more of my content and you want to reduce your stress as you learn this topic or as you learn about accounting, please subscribe and join me for more.